Hello everyone, and you're watching Bitcoin Bubble news channel. And I think this is the big idea and the big chance that the world really doesn't have or hasn't had for a long time. Thanks for coming back to the show. Moj from the Bitcoin Bubble here with another movie today. We're also going to look at Michael Saylor in today's movie. He's going to talk about Bitcoin's next big step, which could make it more popular and open up new doors. More money for BTC. This is from a recent interview he did on Safe Dean's show. As the author of the Bitcoin Standard, I want to thank him for meeting with me. Speaking for myself, I agree with everything Michael Saylor says in his movie. I believe many people would like to use this. It makes me think that more people would use Bitcoin. Long term, I think it would be good for Bitcoin's price. There may be Bitcoin maximalists who don't agree with that, but I want to know what you think. Leave your ideas in the section below. Like and subscribe to the channel. This helps get all of our videos in front of people who aren't already interested in Bitcoin or crypto. Make sure you do that. Click on the link below to watch the clip, and please let me know what you think in the comments. Is the idea that you could keep your cash safe and make money from it? In other words, what's the end goal? Let's say you get a lot of Bitcoin. If each Bitcoin is worth $10 million in regular money, then you have $10 billion worth of something. I believe that soon, the big banks will let you put Bitcoin and offer 500, 600, or 700 basis points of return against it. You're the bank, like I give you a billion. I'm going to give you $1 billion in capital. You lend it to someone who wants to borrow it or short it. That's how much they pay you. I get 400 basis points from you. That's what a banker does, right? And a normal system. That must be how it's meant to work, right? It would be like putting $1 billion worth of gold into your bank. If someone else wanted the gold and paid to borrow it, you would have to deal with both the user and the lender. This is where your balance sheet comes in handy, right? You are going to promise the provider that they can pay back the loan. And I'm not going to lend it to them directly because I don't want the chance of the other party. But if you're a $1 trillion bank with a balance sheet like JP Morgan or a Citi, I wouldn't mind giving you $1 billion. I also think someone else would want to borrow it from you. And the $1 billion is now making 5%. That's 50 million a year. Think about the fact that I'm making $50 million a year from $1 billion. It's not in dollars though, it's in Bitcoin. So now when Bitcoin goes up in value, my money goes up in value too, and I make money at the same time. That is the holy goal. What's great about Like is that you can do it yourself. I have a company that gives me a 5% dividend yield, and the capital is safe and going up in value. If you think about holding only digital cash, why can't I do that? Without the risk of the company and get a return on it. That means you found a way to avoid government inflation. At the moment, I can get a return whether I borrow money in yen or anywhere else. When I go to a place that pays high interest rates like Turkey, they will charge me huge interest rates. But the value of the currency is going down against the dollar. If you get 20% interest and the value of the currency drops 30% every year, then your real return is minus 10% or something. It's not 10%. I get 5% interest on $1 billion worth of dollars, but the money loses 7% of its value every year, right? That's the problem this year. What this means is that my real return on fiat capital is negative. Yes. The real trouble is that all of these places, Apple, El Salvador, and Harvard University, will make billions of dollars in capital. If they want to get a return on their money and protect it from inflation, they can't put it into a liquid capital object. They need to buy property, most likely property. What you buy is business real estate, which is also your inflation hedge. After using it, you get rent, which you have to spend a lot of on things like taxes, insurance, repairs, and replacement costs. After that, there might be some real output in the rest, but it's not much. It's not very much most of the time, and it causes a lot of headaches. And so otherwise I own a company or an equity that pays dividends. So there is a chance that I could get there if I could own a business that could grow faster than inflation and make more money faster than inflation. But both of those are very, very hard. So in the mythical time of the golden age, if I had a bank I could trust and my capital was in gold, I could put the money in the bank and get interest. The bank would then lend the money and get paid, and we would split the interest 50/50 or something. That's a long-term plan for, keeping your money safe and then paying your bills. But we lost that power when money became fiat. Without a doubt, the real yield you can get on fiat capital has always been negative, with maybe a few important exceptions. To do what you want, you have to take some kind of business risk, technology risk, investment risk, or real estate risk. You also need to tell yourself that the return is greater than the risk. Yes, for instance, some people they give money to medium-sized businesses, and all of these corporate lenders brag about getting interest rates of 12% to 14% to 14% secured loans. That's why they're getting more than the 5% that the US or the government pays. They may be telling themselves that the extra 8% is worth less than the risk they're taking because of this. Still, you get 12% on that loan. You are being devalued by 8%. Actually, I don't think the rate of inflation for money has been 7 right now. I think it's been more like 9 or 10 for the past 4 years, right? Right now, the value of your money is going down by 8 to 10%, but you're getting a 10 to 12 or 12 to 14% return. Then there's the risk you're taking, which you may not think is risky, but is actually 4 to 6% risky. Taking a 4% or 5% credit risk, getting paid 12%, and the rate of debasement of money is 8% means that after taking into account credit risk and inflation, you have a 0% real return, right? In a way, those companies work for the general partner because the general partner gets paid extra. The limited partner who isn't getting paid that participant, well, if you're making 2 and 20, you'd want to do anything. But if you're a limited partner, you get a nominal return of 8 or 10%. But after the risk over 20, 30, or 40 years, there will be a blow-up that pretty much wipes that all out. Right now, it's hard to live off of your savings without taking risks. That's what I mean, I guess. I also think Bitcoin gives us a different option. While we're not there yet, I can see a time in 10 years when you could deposit your Bitcoin in a bank you could trust, and that bank would lend it out and give you a yield. You would never have to sell your Bitcoin again, and you could use the yield to pay your bills. The Bitcoin would then appreciate in value over time. Of course, you need a reliable bank for that to work. In that case, what is a bank? In a traditional bank, they take money from people who put it, find lenders who can pay back the loan, and charge interest rates that cover the risk of default. They actually lend money the right way. What's interesting about this is that the bank has to make money for its shareholders and the people who own the capital, and it has to pay the credit risk. And the current system of fiat banking uses banks that are owned by the government and the people. The government decides how much money fiat banks can give out. We also need a group of digital banks that use digital cash. Indeed, we can give the first group of them names, right? You already know about Celsius, FTX, and BlockFi. They were a bit like crypto cowboys, so they couldn't be trusted. They took crazy risks. And it all went wrong. That's not what we want, right? We need a lot of banks that are watched over